Okay, recap for Tuesday's price action. So let's just start about Tuesday's price action for the 5th of November 2025. Alright, let me get this straight. So, yesterday, this is the type of delivery that I expected in my stupid 50 long minute video that had no audio. So that's great. Um, so basically, I was explaining yesterday, so I need to get this idea that we had an inside day on Friday. Okay. ES did not have an inside day and YM didn't have an inside day. However, I'm expecting still a large range candle. When Monday comes and opens up and has an inside day again, which is very rare, that means guarantee you that the next day or worst case scenario the day following after is gonna be very large range days compared to like the previous days. As you can see, ES has an inside day, YM does not. YM actually expands and doesn't have an inside day. But mainly for like this stuff, I'm looking at ES and NQ. YM mostly SMTs and what's it doing? YM is a bit weird to trade. Anyway, so I'm already expecting an early delivery bearish, right? And this is what we get in Asia. So everything goes against plan. However, we expanded way too much. Like when I woke up in New York, I'm like, my initial bias is bearish. However, when I woke up, I was bullish, and I'm gonna explain why in a second. But that's what we need to understand. And look at this. We don't even have a wick, do we? No, we open and we shoot down straight from Asia because we've been held. This day was held so much, right? So let's get to a second. That's the trading chart. Let's put this chart up here. All right. So now understand this. Let's get down to the 15 minutes and just look at market structure, right? From Asia since we opened. Remember, this goes to our volume imbalance on the daily, and we wake at 4 with some news. So that's the manipulation. Rather than having a manipulation throughout the day, this was our real manipulation right through the day that sends us lower. Okay, so let's put the annotations in the chart for this trading chart. So now this is my buy side, right? These are buy sides that I'm looking at, and as you can see clearly, what we're doing is making accumulation here. So this buy side is for the market maker buy model that's happening right now. And look how low we went. I'm looking at some old. Let me get rid of all of this for now. Mess. Get rid of it later. Anyway, this is a market maker buy model clearly. Believing relative equal highs, the whole accumulation will have one to whatever stages, right? And then we'll make the smart money reversal. This is what makes today kind of tricky because today is possibly going to be the smart money reversal, but I don't know if we're even gonna have a large range. Like we might smart money reversal, but consolidate for the day. Then Thursday go up, then Friday go up. You see what I'm saying? Like we'll go up eventually tomorrow, but I don't know if we're gonna make anything significant. It might be just bunch of accumulation, manipulation type in within a defined range on the lows here, right? That starts the distribution, but however, it's gonna take Thursday and Friday to complete the whole buy, and I don't even know if we have the whole week to even finish it. But these are the highs that I'm looking at, right? Because what I've noticed since like Thursday, we've been accumulating for these highs, right? We made these highs, now these highs. We're coming back for them for sure, right? We're not gonna leave them, and we're making sure this this is not how I expect the market to top. Not like this, right? So I'm expecting price to come back. So now we understand that price is going down. Okay. So let's just see, we need to study how it went down to understand what levels we can use for the trading chart, right? So if we drag our PD array chart, what we do is we can see on the let's explain this on the daily. Actually, let's explain this everything, right? So on the daily, our main PD array really is just a big wick, right, as a daily wick, and there is a big gap with its own volume imbalance and stuff. but tracking it will be a mess. So I'm just interested at the current time next to 9:30 opening, where we at. So we need to go up. I understood that we need to go up, and I'm gonna dive into why is that. So this is just a daily wick. On the 4 hour, we have our fair value gap marked, right? On top of that, we understand that if price is really going to expand, it's going to go from a new weekly opening gap to another new weekly opening gap. Why is this new weekly opening gap important? Because it had nothing, right? Nothing traded through it. Look at this. This in itself has nothing, right? It's a genuine liquidity void, and in some areas, so from here basically, is a genuine liquidity void where there is no buying or selling in that price range, right? For this area, I'm pretty sure maybe there might be, no, there isn't. So now we offering sell side through it, and we're gonna offer buy side through it. That's how we fill a gap properly, right? So when we offer sell side through it, offer buy side through it, this area is now efficiently delivered, and we could start going for all-time high again. Okay, so now we understand this, where, and on top of that, the market needs to go to a discount, right? We got two ranges mainly, right? The range that made the run, let me explain this range. So we're just trying to get discount, right? And you see that's where we went in the morning, right? So just remember that level. It's the lower quadrant of the upper fair value gap. And we have our second range, which is the whole range, right? Right there. As you can see, we're just about to get it. And from there, I'm expecting us to go into it and then make either an SMT, make a whatever, right? While respecting, I need something maybe on like the 4 hour, let's just say. That's kind of a breaker, but it's kind of scuffed, but just this general area, right? Let's just say the general area. But as long as now we're in discount, I want us to make, because see, we could tomorrow, I don't know, we have to make some sort of good liquidity here to us to take, or SMT, something need to confirm to me that we're gonna go higher. So I'm not sure. So for now, we understand this is discount. I'm gonna actually keep this here because this is discount of this full range, right? Rather than the run range. Okay. So now we understand the PD arrays that we have to work with today, right? We can see that price went to the lower quadrant, remember, and that was our first discount, right, of that current smaller run. Okay, not the full discount, the small discount. All right, now I understand that. Go back to the trading shop. Here we can dive down deeper to bias at 9:30. 9:30 opens up here, right? So prior to that, I feel like doing the replay would probably be better, right? Prior to this candle, oh, kind of ruins it. At here, I need to have a bias, guaranteed. What do we have in price? We have a minus sell side liquidity, and the tip here, we go one tick below it. That, yes, is taken, and yes, it gives us this to rally up. However, it's unfinished business. I need a body below it. Okay, body below it, and then so I'm just having a mini discount of the range, right? This discount liquidity, and that's the initial liquidity, and PD array. And remember what was under that? Upper quadrant of new weekly opening gap, right? So we have discount liquidity, PD array, right, to go higher. Why am I looking higher when I'm bearish? Main thing is we need to understand what is the liquidity we're seeking right now. Yes, we're bearish. Yes, we need to fill the gap, and going to the top, the upper quadrant is not enough for me. However, it's enough for retracement, and because we hit the discount the range. First thing we need to understand is what liquidity did we take and what liquidity did we leave. We've taken Asia's sell side. We've taken London sell side, even though I'll count London sell side up to 5. I do not care. See, 5, we have this. This is actually a setup that happens a lot, by the way. The 5 liquidity would be there, and then we turtle soup it, and you'll see after 5 it'll initially just start going up. It happens a lot. Trust me, back test it. But I don't trade London. But that to me is we've taken sell side for London, right? So we've taken sell side. We've taken sell side for Asia, London. We've taken all the PM sell side, and the most important sell side is what you look at in the regular trading hours. So I'm only looking at sell side once we opened. Once we opened here, we've taken PM sell side for Monday. We've taken PM sell side for Friday, and we've taken PM and the low of these days, right? For the Thursday, right? On top of that, I had liquidity marked here that stayed where I mean, I've deleted it by now, but I remember because of Monday just went up and left liquidity that I was interested in. So don't you think after taking 1, 2, 3, 4, 5, 6 liquidities through one side, sell side, and that the market went down in Asia and London, that is possible and low-key better if the market still wants to go down to have a retracement? I'm not saying it can't shit itself, but if it shits itself, that means the target is very near, and then it goes down, and then we just start a whole reversal for the whole day. Okay, so now we understand where we could reverse to. What we want to get is discount, right? Again, there's just 2 discounts that I'm interested in: the mini range and the whole range. Okay, and the whole range will be the whole range of the manipulation, or like the current one. In the smaller time frames is a bit different, and you could low-key mess it up, but hey, discount is discount. You can't really mess it up that far, right? So the first discount that I'm looking at is this range, this high Asia to the low, right? Our current daily range. And why is it specifically to that Asia high? Because I need this to have a manipulation to distribute. I don't care how small it is, but it has to be to the PD array. And that Asia high, if we pull our PD array chart, goes to the new weekly opening gap high, and you can see it starts plummeting from there. Second discount that I'm looking at is the whole range, which is the one that goes externally here, takes the liquidity and manipulates into a PD array. This manipulates to a daily PD array. So that's my second discount that I'm looking at. I had this on the chart, but I just remember that it's next to midnight open. And now that we opened, I'm gonna put the rule of, this is the opening range gap. We have an opening range gap, right? A big one. Normally, if we're gonna even trade up into it, I would like to see the midpoint, right? And ICT teaches that we reach the midpoint 70% of the time. So we're adding probabilities to the trade. So now, as you can see, the bias on this bearish day for the start is bullish, right? We have the initial buy side, London buy side, midnight opening price, right? That we don't even attempt to touch, right? So think about this. Once we open in Asia, we don't even offer the discount for the new daily opening gap. No. And midnight opening price, right there, we just have a slight wick. So my target and is somewhere here. This is my target, really. Discount. Why? Because if we had our whole range discount, right, it's there. Everything's lining up in this area, right? On top of that, just remember this level: 2592 350. that lines up with this lower quadrant of the daily wick, right? This area. And on top of that, we have like the upper quadrant of the 4-hour fair value gap. There is stuff that would support price going lower, and that's just, what I expected. And also, I wouldn't mind if price took an extra day to dump lower. So like this day could have went up slowly, eventually went here, accumulated down here, whatever, and ended. So I learned my lesson of, do not predict the whole day. Predict what's obvious and just use it. That's a mistake that I made in like Monday, right? I knew we were gonna go to these lows, but I wanted to go and buy up. Wrecked. I took the easy trade on paper, which I should be taking on my accounts. Anyway, now we understand this. Now we need to go and buy up and just see what happens, right? First thing, we need to look at discount, and we need to displace through this first discount of this range, and then see if price can get up there. Okay, so that's the initial for the trade here. And I'm not gonna lie, I was like, we've already taken so much sell side, we could rally up, right? We could rally up initially very fast at 9:30 and just shoot up. That's something I didn't want to miss. So I'm not gonna lie, this one's premature. So let's just go to the 1 minute on the other indices at market open. Okay, just zoom that here, zoom that here, and 9:31. Zoom that here. All right, that is the 1 minute open right here, and as you can see, we don't have any SMT anything. We basically 717, we take that, but like there's nothing, no SMTs, nothing that tells us, yo, we're gonna go up. So once price goes down, dips and starts going up, I enter, and I realize it's impulsive. I was like, fuck it, it is what it is. It takes me out, it takes me out. I entered on low risk, and candle goes up. Let me slow this down a bit. The candle goes up, and then the next candle takes me out, right? I knew that's impulsive because I should wait. Regardless of how much liquidity we should take at least the internal liquidity if we're gonna make a drastic move up. And we do. Okay, now because I took that loss, I can't do my risky entry. What's the risky entry? Is once we went down, and now we have discount, liquidity, and then PD array, which is the upper quadrant of the new weekly opening gap, and look at the bodies closing on it, right? Closing on that price. So now this becomes high, because it's on the quadrant, high probability order block, right? On top of that, we have an SMT with the lows with ES, right? So this low, NQ takes it. However, ES doesn't. It's a significant SMT, right? In the range of it. And I know we can't take these lows. That would be too much, because if we have an SMT at the main lows, then that means this Loki is the low, right? This is the low of this whole run. And to me, that's not good enough, because we have not reached even the midpoint of the new weekly opening gap that's open up there. So we can't SMT them lows, right? Unless one of the other indices really filled it, but it doesn't make sense. I want a smaller SMT, not a bigger SMT, right? So the other entry would be the midpoint of this wick, right? And then to the lows. However, and I'm gonna stop doing that because again, that's a premature entry. I should see if we're even gonna have a reaction to it, or if we're gonna even have a reaction to the order block, right? And then after that, entry. So you can see price, it goes down on the next candle, straight shoots to the order block opening price, right? Right here. shoots to it, boom, reaction. At that point, honestly, should Loki find the midpoint of it. I can see rejection block has already been used, right? This is the lowest candle. So I do not want price to go to the rejection block. Put few ticks away below this low. That should be stop loss, right? I've been working on stop loss management and seen that I'm leaving it way too wide. So risky entry could be once price start moving up. From that, buy stop loss here and just see what it gives me, right? See if I'm right. As you can see, I have one fair value gap marked, and that's the first presented fair value gap. And I've seen the use of the first presented fair value gap is it kind of, I'll genuinely use it as support and resistance, low-key. I'm not even gonna lie. And I actually find the use of it like that is really good, right? We stay in bottom half, we're bearish. We go above the bottom, we go off the bottom half, right? Or we stay in the upper half, we're bullish, right? And it's good for stop loss management. So that I need to mark it every day. And if the trade's gonna be again on it. Now, what is this? Low, high, lower, low. Changing market structure, and we have an inversion fair value gap. This is the gauntlet if it ever gives it. But as you can see, once we go here, we don't offer this propulsion block, right? We do offer to the wick of it, but I had an entry on the opening price. It goes and leaves without you. That's cool. What's the next place to enter? Again, we explained the breaker block. I'm not gonna I entered on the breaker block, understanding that my stop loss has to be wider now because we did not offer this opening price, right? However, if we have to offer that opening price, we're gonna have to go below the low of this gap. I want this because this gap is in the range of this. This would be too much of a, how you want to call it? This is a breakaway gap, right? Because it's inside this range. Look how perfect it is inside of that range, right? This is a breakaway gap. I would like it to stay open. However, if price really wants to be a dick about it, it could come to this opening price and that's about it. So I had my stop loss right there as wide as possible. And as you can see, boom, I get tagged in, stop loss here, right? Get tagged in, stop loss just below the opening price. I don't expect it, right? And what's really protecting me, and I'm confident that I'd probably kill the trade if it even like enters this realm, is that I don't want it to trade below the midpoint of the first presented fair value gap. However, I'm just leaving it there in case some random wick comes, right? It should not go below that, right? And if it's gonna wick below this gap, it's just barely gonna touch it or it's gonna come exactly to this low. So I just want this to stay open, and in case there's a slight wick, I'm offering that opening price maximum. However, if you want a realistic stop loss, it should not go here, right? However, the market is so volatile, I want to stay safe. I put the stop loss here. TP and even though the buy side is here, I'm looking for buy side and then the fair value gap, right? This is the buy side. Where's the fair value gap? Right there. So, is that above discount? Yes. And I shoot for the midpoint of it, right? And that was my trade, right? Price comes back down, right? And I'm not even phased. I was like, all right, nice. We're going to have a turtle soup inside. Even offer the proper side of it, right? Just remember, this whole thing, if you can see my stop loss, it's so covered, right? Why? Fair value gap, breaker block, all the breaker block, all of it, right? All of it. Order block, right? Propulsion block, I mean. And on top of that, the first presented fair value gap. In no case should, like, I don't know, stop loss be wider than that ever. This is the widest stop loss that I could have. I'm giving it such a breathing room because how confident I am, right? And I know it could do this, right? And this could have came even lower. Okay. And what's better that it stopped here before taking the highs. That makes it so guaranteed. As you can see, boom, boom. And what's nice is we have a big fair value gap above. What does that mean? My trade is right. Do not kill it, right? I'm aiming into this direction, but look at the amount of points. It's greedy. So I just let it run to the TP. As you can see, boom, boom, boom. Just candle after candle, run into the TP. We have a little retracement. We push slightly higher. And you can see we fill the full gap and just start meandering around, right? So if we extend this by a bit, that's stage one. And price genuinely could have stopped here if it did this very slow. However, now I say if price is gonna go up to go down, I've been saying it. There is 3 times to look at: 1010, 1032, well 1028 to 1032, and 1050 macro. Right, London close. If price, right, and it starts like from London, I know that London takes the low is at London time basically, right? 5 thingy. 1050 macro is very nice because then that's profit taking or whatever, right? That's when price reverse tends if the run starts from the bottom of the heart London, right? So I'm expecting the 1032 or 1050 for today to dump us. However, I'm not going to participate because I've made my money. That's it. Get out of the chart. And I understand this is the manipulation leg. So I know this is the fast one and the distribution is slow. I can't be asked for it today because I got shit to do today, right? So I'm not going to take 2 trades. I already made enough money, right? Now that we understand this, right? Here is 10. When I say 1010, like the price really has to make the high at like 1009, 1010, 1011, right? In them 3 minutes, like it has to be up there. Look at that. Look at 1009, 1010, 1011. It's retracement. So we're looking at the 1028 till 1032. Where we're at, we're already retracing. We need to just check one thing real quick, right? And I'm looking for an SMT at the same time. I'm going to say that, right? Anyway, so if we put this chart into a 3 minute, okay. The stage is already set to go down at 10:15, right? Why? Because YM reaches that midnight opening price. Yes, barely, I think. I think he has tags it perfectly or something. Yeah, the midnight opening price, right? And goes for that liquidity. This one, this one, this one. It's the same liquidity that I was like, okay, that's the highest we could ever go if it's still like true. Okay, so we have that SMT at the here, right? 10:15. Is it? I think it's this run up basically. I can't be able to check it out properly, but we will set this stage. However, I'm expecting a quick SMT between these two. So that could set the stage. However, do we have anything meaningful? No. Nothing says get in. And here we have an internal SMT. And that is, right? It's another SMT between. Right. If I can show it, let me actually just show it, right? NQ makes this high. ES and YM both make a higher high. So NQ is already signaling it's weak. And why is NQ weak? Because NQ is the only one that didn't fill its gap last week, right? So this big gap, NQ didn't fill it last week, right? So it's the one that really needs to go down to go fill the gap. It's got no business being up. That's why YM does not bother to even go down that much. All right, now let's dive to actually entry. Okay, this, when it comes to 1050, when it accumulates up top, there will be one main fair value gap, right? And it'll be this, and normally it will actually not close below it. This 1011 is a bit weird to me because normally this gap will not be closed below, right? Throughout that whole time. So this is just a bit weird to me. I never really see it do this, but the gap will not be closed below, and you'll see at 1050 or just basically near it, we will close below it. That is one of the best entries, right? I'm telling you, from back testing so many times, when I'm telling you, if we're gonna go up to go down, look at 1010, 1032, and 1050, right? I don't know what's with these times, but just check them, and it has to be on what the market conditions. Are we near the highs already? 1010, because we're just gonna open, market is gonna shoot up. Are we, London's the one that's made that low, then 1050. And then there's certain weird conditions where it's like an in between of both, and the 1010 high basically will get SMT that 1032, and it will be high regardless, but there'll be some sort of SMT. That one's more rare, so it's the 1010 and the 1050 mostly. However, how do you know it's a 1050? Once we start consolidating from 10, right? So 10 closes and then we start consolidating. That means it takes one, it's like the nice ones is 1 hour we go up, consolidate, and then 1 hour we go down, right? But it can take longer, right? However, we need to consolidate for that whole time. And always, best is to stay above the fair value gap. I'm not sure why we closed this low in these two candles. I mean, we opened here, so we kind of mohawked it, right? If we're looking at like, I don't know, well, 2 minute, we still close below, 3 minute, whatever, right? Well, this is basically like we staying within this gap. So like, I don't know if I'm gonna mark it in like a 5 minute. Look, that's too big. But as you can see, it's low-key the same thing, right? And it's, if we just mark it on the 5 minute, I don't know if there's like a volume. There's a volume imbalance, right? See, just that mini one. So low-key, you could do it on the same thing here, but once the 5 minute closes below, I don't use the 5 minute for entry, so I'm just gonna use the 1 minute. But it's the same concept, right? We're not closing, we're closing above, right? And we're staying above. So once we close below, and you can see there's a lot of times we don't close below, but what this helps is 1047. One more candle. Down, look at this video. Right there is your confirmation. 1048. That entry will always be around the 1050, right? 5 minutes before it, or maximum 10 minutes after it, right? The entry will always be there, but you're just waiting for this gap to close below, right? Here we close at the low of it, now we close below it, boom, you're allowed to enter. And honestly, entry is literally anywhere in it, right? I'd be mostly seeking the lower quadrant, and I don't know if that lower quadrant would get me, but if I see a lower reaction, right there, a reaction, I don't know if that offers the entry. I don't think it did. But if I see it just missed it and went, like you see that, you see how it just missed it, right? So I just mark it entry on like this order block after it, right? So this order block, I'd mark it entry, and I would still offer the original, um the original, bro. Trying to just see how much that would have offered. Like, god damn, like, come on. Alright, sell 5 again. Alright, and the stop loss is always a tick above this, above the inversion fair value gap. That is how you enter this, right? And of course, once we deal with this gap, once like the first stage is done, right? And we take this low, or don't take this low, we just trade to the opening price for the change in state delivery. So we wait, because this could go all the way up here, you know, it could. I'm telling you, I've seen it. So until that opening price there, now stop loss is above this high, guaranteed, and you just let the trade run. First TP, because this is a market maker sell model, essentially, is the low here, right? So you buy one, and because these are relative equal lows, honestly, I'll just put here until an SMT happens, right? And that's your TP. Why? Because if we look here, the real TP is the midpoint, the lower quadrant, and the low of the new weekly opening gap for that day. And you can see we hit almost the low of it by 4. So we don't get to it, but we don't be greedy here. So this is what we take. And if you let it run, and I like watching this on the 3-minute for this, right? And as you can see, once we go, we wake up. And how do we know we're bearish? And I haven't even looked at the 3-minute chart, I'm telling you, for today at all. But it's nice to see on the 3-minute because I don't know, it just behaves better there, right? Knowing that now that we closed up below this, like already here, right? Like once I say we're going up, stop loss was above that high. You can already see that stop loss could have went above this high, right? So on this whole wake up. And what this allows is us to trade into this gap and this fair value gap. And as you can see, we traded into it and closed below both of them. That is the most bearish signature that you can see. I'm telling you, it's so good, right? Anyway, now we know stop loss above that high, and realistically should be midpoint, but we'll just leave it and then let it run, right? You can see we run, we hit that TP, and there is the signature again. We go below that sell side by a couple of ticks. That's not good enough for me, and we don't have a buddy. That is unfinished business, right? So we're expecting a little bit of manipulation and to continue into that direction. And honestly, price could like done this and even went up and done higher high, but I'm guessing there was an SMT here, so it's done enough. And then we continue and go lower. All right, let's look at the recording length. Goddamn, 37 minutes. Shit, I expected this to be very short. Anyway, that's the market recap, really, right? It's simple. Our target was midnight open, but we reached that on ES and YM. So we're bearish. Here, we're bullish. But now, at this stage, if we think about it, what are we at? What did we do? We're at discount of the range, so we could keep expanding and we keep dropping. Okay. Second, what have we done recently? We've taken buy side and we have taken buy side, right? So could we come back and take sell side? Yes, now we're allowed. So we have discount, right? And we turtle soup. So discount, liquidity, and then there's the PD arrays that will hit them. I don't need to dive to what to the tick. All I know, we inside a 4-hour fair value gap, and to get to the tick price is honestly annoying me these days. So I'm just waiting for the confirmation of something else rather than having so many lines on my chart so I can focus, right? You can see after that, it's just simple as that, right? Well, I mean, we could look into like the normal chart for other PD arrays if they've been hit. I do remember there was a PD array here confirming this high exactly, and that was on the daily, but I got rid of that. So yeah, right. And on top of that, what's a high probability fair value gap? Why did price go all the way up there? Remember what ICT teaches. The fair value gap, that's at 1051. Okay. Remember there was a line through it, and that was the only fair value gap that had a line. That fair value gap once it aligns with time. On all of these, the fair value gap that's within a quadrant, once it aligns with time, it's the right high probability fair value gap. And honestly, if ICT was watching the chart, I know this is a trade he'll take. Why? Because 1050 till 1010, look at the respect. That's an entry you put there once it goes in it. Stop loss at the high. Boom, we wick, bodies close. And if you don't even want to enter that, you could enter this stop loss at this high. There's so many ways to enter this trade, because this is the distribution, and look how long it takes compared to the manipulation. Manipulation literally took me a few minutes, but the distribution takes so much longer. However, it's gonna be greater than the manipulation, right? And that's why you want to get a 0.5 and a 1 like standard deviation, right? So let me just do it from the opposite side, right? Right, you want to get this and like a 1. Right, I need a negative 1. There we go. Right, and let's just see if price goes there. So like if you want runners, see, like I didn't even bother looking at that, but I'm just saying, if you need runners, funded price like stop right here with the bodies. Look, 1557. This is past, like, okay, let's look at it like here. So that's how we get the low of the day. And honestly, high of the day, I can't tell you what it is today exactly to the tick like all the other days, but I do not care, because I know we made the high of the day. No, actually, no, I know what the fuck the high of the day is. What I'm talking about. The high of the day was it was already made from this, right? This manipulation. And like the second one, it was the new weekly opening gap at Asia. So it's not necessarily has to be the higher day, but it's close to the higher day, right? The one that is the top of the manipulation. We've already done that at Asia. This is just essentially just a continuation. And this is what you find in lower time frames. I can tell you what this high is. This is the upper quadrant of the 1 hour fair value gap to the tick. And that's why you see price struggling to go above there, because that was meant to be the high. However, we had to wait for time, 1050. So we just little soup, and you can see bodies will never close on top of that, right? I can show you and just to like be like more specific with it, more. Right. So if we use the daily, that's how I see it. If we use the daily PD array, and we have, and that was in a run, that's how I see the runs now, right? Consistently, that's how they look like, right? Is we use the daily, then we use the a 4 hour, and then we use the hour, right? 4 hour I can't really tell where that was, but I'm guessing that's within one of the runs up there, and we use the nuclear opening gap, whatever, right? Look at that high. That to the tick is not random. That if that was reached at like 1010 or whatever, we would honestly just dumped instantly. Like, right, you just need to know the profile of how we're going up to go down. And that's why we do all this turtle swooping around here while accumulating, right? Until time is telling us to go. 1050, we offer the entry exactly to the inversion fair value gap. We're so weak that we don't even get into this gap, and we make it a breakaway gap, right? Which is really good. Then second is you're looking at this gap. Why? Because it's laying on top of a quadrant, and on top of that is discount of the range. Why is this the range? Because this is the high, this is the low. You're looking at the fair value gap at discount. There's nothing left of it, so you look at that. You miss that, and you say you're waiting for it, and you see time. You got this next fair value gap. On top of that, that looks like an OTE to me, right? Like when I see this gap when it goes up here, that looks so OTE to me. I'm not gonna lie. 7-9. Damn, we miss it. But trust me, that is one of the best ways to enter OTE. If you have OTE and you see it goes up basically to it into the tick, I mean we hit the OTE 705, right? So it don't matter. I most like the OTEs when they're to the tick or just one tick above or below, one tick above. I mean, or below, depending what direction you're looking at. Price goes down, fair value gap, and normally it's a balanced price range. You enter that. Stop loss literally doesn't even have to be the high. No, in the bow, stop loss could be anywhere here. You don't want it even to go up there, and that is one of the strongest stop loss placement that I know. And you just never go there, and it will just distribute. It's so good. I like it, and I like how this is an entry after 1 and 2 confirmations, just like my entry here, right? This just me being impulsive. This is what I'm working on. I'm being impulsive. This is my downfall. I'm so good at reading price. It's actually getting ridiculous. But me being impulsive is what's stopping me, right? So I'm just working on psychology right now, and that's the main thing that I'm working on really, because other than that, I know how to trade. So other than that, I'm waiting for 3 confirmations. First confirmation, body on what do you call it? Body is on the upper quadrant of the new weekly opening gap. CISD smacks it, goes rallies higher, and then breakaway gap, right? And mainly closing above the midpoint, right? And that's why I didn't even enter, right? I know I had my order here, but then I dragged it down. I was like, no, I don't want to enter, right? I had it there for a second. I was like, if it's gonna give it to me quick and go, then go. But once it closed, right, and I seen it close below midpoint, I was not interested anymore. I want to close above midpoint. And once we do that, now we have our 3/4/5 confirmations, because now we have a fair value gap inside the breaker. That's a unicorn. You enter it any day of the week, right? And as you can see, you need to track what the bodies are doing. Bodies at midpoint, CE, happy days, TP, right? To the high of an hourly gap, but target should be midpoint. But as you can see, I got out basically at discount, right? I'm not being greedy for the day, and I'm not trying to catch distribution when I already catch the manipulation, bro. I'm not gonna be a fucking charting wizard. What if I did this and then it went higher? What, I'm just giving my profits back? No, it's not happening. If I have another account I didn't trade on, I could try to get the manipulation. But other than that, honestly, for your sanity, leave the stupid charts, bro. Otherwise, you're gonna start seeing shit. Anyway, I feel like that's enough yapping. Really good market recap, I think, and I think that's generally gonna be the best day of the week. I don't know why we're expanding this much in Asia, right? And you can see we're creating relative equal lows. So today, I don't expect much. I do expect us to, how do I say this? I do expect us to stay within this range, right? And as you can see, we hit the order block on the daily right there, right? So I expect us to stay within this range, right? I don't expect this previous daily high today, no. And we already taken previous daily low. So I'm expecting us to just stay in this range and just, make the smart money reversal. So Monday, Tuesday, Wednesday, I don't know how much we'll have it, but I can't tell you until 9:30. But regardless, I'm expecting that we have reached discount. Remember where discount I put, right? Did I leave it on the chart? Did I not say I was gonna leave it on the chart? Oh, I left it on this other chart. The actual quarters discount, right? So remember, I want even a lower low here than this, right? So just notice how we make this low. It's just an obvious bait, right? This is not the reversal. And if we're up here, I'm still short on the day. Getting that low, right? This will be my Asia low target. That'll be my target for today, and I should be bearish. You know what? As it is, right? You low-key don't need a full bias. You just need to know what liquidity are we going for right now, and that's how you know your bias essentially. right? Having a full outlook for the high time frame buys is nice, but if you know where we're going for right now, go for it. We're going for this buy side, target it. Are we going for this sell side right here? Yeah, target it, right? Find out where we're going right now. Don't go into too much gibberish. That's the market recap. Beautiful recap. Beautiful day. Looking like it's setting up like a beautiful week of the accumulation, manipulation down, maybe stalling and then starting the distribution, but essentially starting the distribution today, ending the manipulation early this morning, right? I don't know. We could have 2 days of full. We could extend the manipulation. I don't know, but all I know is I'm looking for distribution soon and a smart money reversal. Like think about it as this: this day is the accumulation, Tuesday manipulation, Wednesday smart money reversal, and then let's say Thursday might be the first stage, and then I think with NFP we could just zoom it the hell up, right? And just take all of them, right? And if we don't, and if on Friday we actually don't zoom it up and we actually come back down, I'm expecting this buy model to end regardless, right? So yeah, peace out.